What's up, fam? Welcome back to another episode of Rawstocks. This is Rustic. Today we're going to be taking a look at Tesla's chart. We're going to look at where price came from, where price ended today, and where price is likely to head tomorrow and into the rest of the week. Before we get started, as always, don't forget to check out the description below. Got the links to the Rawstocks Discord where we have deals going on to upgrade for premium membership. We also have a link to the Rawstocks Discord, or the Traders Helping Traders Discord, where I'm also hanging out during market hours, providing some content there. And there's some other ways to support the channel in the description below, including some social media links if you want to follow me on Twitter or some of the other social medias. So let's jump into the charts. Tesla had a nice bounce. We talked about the possibility over the weekend, if you watched my weekend update video, the possibility that we could see a bounce. We talked about the previous day high, previous day low range of Friday, which we had a pretty small range relative compared to Tesla's normal moves. And so we talked about the possibility of taking out that range and then where we'd be likely to head if we did break that range. And we have daily fair value gap right here from these three candles. We also have another daily fair value gap where we saw a market structure shift right here from this low to this candle low here. And then we have two additional fair value gaps even higher up near our volume node point of control. So if we continue to rally up through the rest of the week, we definitely could see us draw back into these fair value gaps. We know that they're magnetic, right? As we saw price run away from, now we'll see price draw back into. How far, we're not entirely sure. But we can look at Thursday and Friday's candles and say that, there's a good chance we're going to see some retracement here because we had a gravestone doji. We had a kind of like spinning top doji Thursday and Friday of last week. So those are oftentimes bottoming candle signs, not necessarily always true, but definitely, can be a sign as well. But if you were to look at the RSI, it doesn't look like we bottomed out there. So we might be just looking for a correction on the daily time frame. And so where might we head? Well, we can look for our Fibonacci. Besides looking at the fair value gaps, we could be looking at our Fibonacci and call this a swing low. And we could be looking for short entries. If we were looking to continue to go short, we'd be looking for short entries back up in a premium price range. So at this point in time, unless you're scalping or day trading short, you're not necessarily looking for entry down here, right? Currently in this trading range, in this dealing range, if we're considering this the bottom here, we're not looking to enter short while we're in discount. It's not a premium entry. It carries additional risk because price could continue to rally higher. And there's no clear indication of where your stop loss should be if you were to enter short, like say in today's candle or maybe even into tomorrow. So if we're looking to go short, we're looking for price to come back up at least to 250, right? That puts us at equilibrium. That would be your first potential area to start considering looking for a short entry. If you, and then above that, we have our fair value gap. And then we have the 61.8 fib level at 253.67. Then we have another fair value gap and we have the 70.5. So our optimal trade entry range at 256.43, right? So if we're looking to go short, we want price above equilibrium back into premium where we can get the best short entry possible for a potential move that will continue us to the downside. Nothing says for sure that we're going even further deep to the downside. We haven't broken this low here. Right now, we had a nice sell-off. We're catching a bounce just on one day. And so we can see in these wicks back from Thursday and Friday, there has been some buying pressure, but it's been met with resistance. There wasn't much resistance today. Nice move to the upside. Bulls jumped in. They took control. They ran it up. There was a little bit of corrections as we look on the lower time frame. But, nothing too significant. And we left a very little wick on top, so it just shows that there's not a whole lot of selling pressure, at least in today's price action. And so again, if we're looking on the daily time frame, and these are going to be more your longer term plays, we're looking for price to come up into fair value gap, equilibrium, fair value gap, optimal trade entry, and then ultimately our higher fair value gap up here. And then often using the same elements of a trade setup taught by ICT and Smart Money Concepts, after we see the market structure shift, which we saw right here, we want to see price draw back into a fair value gap and into, in this case, premium before we take our entry. And so that would be your Smart Money Concept setup and your stop loss. If you were going short up here somewhere in the premium range, your stop loss would be at or above the previous high. So let's drop into the 4-hour chart. We're going to leave those daily fair value gaps on there. 4-hour chart, you can see lots of displacement candles to the downside, right, over the last 2 weeks. So we got displacement, reaccumulation, displacement, reaccumulation, or we'll call these distribution, right, reaccumulation, distribution, right, and then we saw it kind of bottom out here, a little bit of sideways, came down, took the low. It looks good for at least a short-term bottom, right? Looks really good for a short-term bottom. If we're looking at the RSI, you can see we kind of bottomed out here. We caught a bit of divergence right there, bullish divergence, and we've rallied up since. So on the 4-hour time frame, we saw some nice, on Monday's session, we came down, we tried to run on sell side liquidity, we bounced up. Second 4-hour session of the day looked good. Nice bullish candle with just a little bit of rejection off the top. And so again, you can see the daily fair value gaps that we're targeting. You can also see I'll just put the most recent one, but on the, now let me make sure I got I'm going to put my Smart Money Concepts indicator on as well, just so you guys can see if there was market structure shifts. Let me double check my settings here. So we're looking at swing structure. I'm just looking at only internal structure. I want to take the order blocks off, the equal highs off, the fair value gaps off. Just looking to identify the structure here. Okay, so on this one, you can see internal, we had a change of character here. And so then we'll be looking for price to come back up into one of these fair value gaps before we take our entry. Again, this is also 4-hour time frame. 4-hour time frame, we can see some additional fair value gaps that we will target, and I will highlight that one so that you can actually see it through the daily fair value gap. So here's confluence here between this fair value gap and the 4-hour fair value gap. So we'll most likely pull up into this, 242.85 to 243.89 or 244. So that would be, most likely target early. We might see a bounce back down and then might continue up back to equilibrium. That wouldn't be off the table. You also have kind of this little bit of a consolidation here where we also found a bottom. This is a breaker block, so it's important to note this block specifically, and we will mark that there. So there's our breaker block, also inside a daily fair value gap. So once we pop up here, we'll draw our little path. Let's say we just, hypothetically pop up here, see a little bit of a correction. Most likely, because of the high confluence here, we're going to come up and at least trade into this breaker block and see if that breaker block becomes a mitigation block that holds price below. But if it continues higher, then again, we got our equilibrium. And then we also have a second breaker block that we could be looking at, and that is this block here. And that would put us all the way back up into our optimal trade entry area. I'm going to make that less shaded so you can, just more clearly kind of see that. Okay, so we have breaker block, we have optimal trade entry, and we have a fair value gap all in the same area. So not saying this is necessarily going to happen, but hypothetically, right, again, we rally up, we find our resistance kind of here, we see a little bit of a drawdown. We should see, if this high or maybe in this high, we should see a change of character get triggered there. And then we could pop into here, and then we could do one final leg up, kind of into that optimal trade entry or into that higher up breaker block or that fair value gap that's up there. That would be totally logical. And then even from there, we could see a dump down. That would probably take us maybe into earnings or maybe not quite to earnings. So we'll just have to see. Earnings is all the way out to the 24th. So we might see that correction. We might see it come back down. Might take a little longer to do this whole move. We'll just have to watch and see what price gives us. Let's drop down into the 1-hour time frame. Actually, I want to go back to the 4-hour time frame and just give you also a bear case scenario, right? So say we just straight rally up into here, and then we find our rejection. We might then at that point come down, take this low before we find a more long-term bottom. At that point, if we did come take this low, then we might see price try to rally up into earnings from there. So that's a little bit more of a bear case scenario. Like true bear case scenario, I guess, could also be, we just pop up, come down, take the low, pop back up, and then just keep heading lower. Less inclined to think that that's going to happen just because earnings is not too far out. We're going to run into earnings season soon. Going to probably start to see some rallying in the market ahead of earnings, just in case. And then a lot of times, you get the earnings, it's a sell the news kind of situation. So now let's drop down into the 1 hour time frame, and on the 1 hour time frame, we can also see some additional fair value gaps here in the 1 hour time frame. We've already traded back into it, and we haven't traded back through it, so just something to watch as well. We already have 4 hour and daily fair value gap in that same area, so I don't need to draw it out again, but you could draw it out to look just for the confluence in all three of those fair value gaps. That's going to be definitely our target area, but we're pretty close to that. If you look up further, we have another 1 hour fair value gap here that's also inside a daily fair value gap, which is also inside a breaker block. So that one you could annotate on your chart on the 1 hour, and just make sure, again, if you're putting multiple fair value gaps on there, try to mark them off with some kind of labeling so that you know exactly what that specific one is, or color code them differently or whatever you want to do, just so you don't get confused. But you could see inside of this area right here in like the 247 area is the highest confluence inside that breaker block, inside two fair value gaps. So if we break through this area of confluence, then we're definitely likely to head up into that mid 240s, where we see a confluence in multiple different time frames. Then also, if you look up here, another fair value gap here that's also inside an order block, or a breaker block, which is also inside, has some confluence with another daily fair value gap. So a lot of confluence in those two different areas, and that again puts us right above our equilibrium, and then pretty close, if not inside of our optimal trade entry range. Only thing past that is this kind of like a little bit of consolidation where we see some engineer liquidity up here at that same 70.5 fib level. And then beyond that, we do have some additional fair value gaps. I don't think we're going to trade all the way back up there. We certainly could, but I don't think we're going to. We see on the 1 hour time frame some additional change of characters. At some point in time, that will need to be a balanced price range, but we might not hit it until we're actually planning on attacking the highs. And I don't think we're there yet after this big sell-off. I just don't think it's strong enough to then rally all the way up past 265. Kind of a lost cause at that point. But again, we do have some unbalanced price ranges up here at 252.42 and at 260.25. So eventually those will we'll cycle back around and take those. So we'll drop down into the 15-minute chart. Okay, the 15-minute chart just shows us a little bit more of the structure. You can see we have a 15-minute fair value gap also in the same areas that we have a bunch of other fair value gaps, which is why we've tried to take it. We've popped up. We've come short of it, but I think we're going to take it maybe Tuesday, Wednesday of this week. I think we'll trade up through it, maybe all the way up to 245, where we might catch a little bit of a reversal Thursday into Friday. That's just my guess. Doesn't mean it's going to come true, but we have seen some bullish activity now with our on our 15-minute chart, where we've got a change of character and a couple breaks of structure, right? And so that's a good sign, even if we do pull back a little bit. Let's see if there's any targets that if we were pulling back on like the 15-minute chart that we'd be looking for. So tomorrow, if we get a pullback to this area right here, which would be like 239 down to 238.50. That could be one target. There's a fair value gap right there on the 15-minute chart. I still don't love that entry, but I don't know that you're going to get a better long entry if you're trying to swing. If you use our fib tool here and we take a look at just the premium discount range, you can see that I'm not really interested in taking a swing trade if we're not below 238. That's below equilibrium, and so you can also look at what your targets might be on the 15-minute chart for like short-term swing trades. We have another fair value gap here that's in discount, and beyond that, I don't see really any other fair value gaps that haven't been traded into and already repriced through. We have some down here, but we came down and repriced through it. So our first fair value gap would be here. Our second fair value gap would be here. I'm only interested in taking like any kind of swing trade long if we do get back to that 238, 237 and a half down to 237.34 or something like that. So if we get below discount into the fair value gap and we've repriced that, I'll take that trade, or most likely take some kind of long position. And then our previous low down here is our stop loss, and we'd be targeting, the confluence in these fair value gaps here. And so if you were to look at that trade, it would be something like this with our stop loss down here. It'd be like a 2-to-1 risk reward ratio. So it'd be decent. That's the kind of setups we're looking for. So we'll drop out of there. I'm going to remove the drawings, and then the last thing we're going to look at is the 1 minute time frame, so we can identify. Actually, I got a different chart here. We're going to identify the elements of a trade smart money concept setup that we called out on the Rawstocks Discord. It was good for 25%. And I called it out as a 5 contract trade. Other traders took it for single contracts. Either way, it was a nice trade. So what we want to look at is heading into the 9:30 New York Open. We want to look to see did price run on a previous high or previous low. Okay, what I can see here, price ran on a previous low or gap down. Okay, we immediately rallied up, and we got a change of character here, and we came back down, and we traded into a fair value gap. We actually traded a little bit below it, so it might have seemed like slightly dicey when that fair value gap didn't hold. But we have a fair value gap here, right? And so when we come back down into equilibrium and we come back down below equilibrium into discount, and we're inside the fair value gap, you could have looked at that, or you could have waited to see if we got all the way down here, but this was below optimal trade entry. And so I took the trade down here somewhere, right? And then we rallied up from there. You could have also taken the very early trade. Actually, I think this is where we entered. Sorry. This was the fair value gap we entered. This was a secondary fair value gap you could have looked to enter, but this is the one we entered. So we saw the rally, and then we had the fair value gap entry, and then we saw it rally up from there. The point that we were looking at was this order block right here. And then you can see on that first trade that the order block was right here, and mark it like that. Actually, we'll mark it blue so you can see the difference, and you can see price traded right up to it, called out the close nearly perfectly as we traded into the liquidity. And then at that point I know why it is. We don't have extended session on here. Sorry, the change of character was throwing me off. Right. So here we go. So here's where you saw that change of character, right? Traded up, change of character after we ran on a previous low, back to the fair value gap, right? And then to the liquidity target. From there, you could have tried to take additional trades using the same smart money concepts. We got a bearish fair value gap right there, and we have price come back to equilibrium into premium, right, and into our fair value gap. And then from there, you're targeting a previous low, or you could target a previous order block. It did not quite get back to the previous low. If you use the Fibonacci tool instead of premium discount range for optimal trade entry, you can see we did not quite make it all the way back down to symmetrical swing either. So, you gotta try to figure out like where you're gonna close that trade at. You could use things like RSI. We did not totally bottom out. And so, that's going to be on you to figure out how to exit that trade if you took it, because it did not quite get to symmetrical swing, but it did get inside this bearish order block at the bottom here. And so because we traded into there, that could be your liquidity target. You gotta understand you can't be married just to a specific level. And that's why We teach order blocks. We teach, breaker blocks. We teach mitigation blocks. We teach, zones. We use fair value gaps, which is a range, right? And it's not a specific level. And so if you were to have taken that short, you write it down. You got order block here. We traded into the order block, back out, into the order block again, and then ultimately we saw some bounce here. And then there was a second trade or a third trade that you could have tried to take. I didn't end up taking this because I didn't see what I wanted to see. And what I wanted to see, it was a long trade. And what I wanted to see was price come back down. So I was looking at swing low to swing high. Let me take off these fibs so that we can see it better. So I was looking at this swing low, and then I saw price rocket up here. So I was looking at this range, and then I saw us come back down like way through optimal trade, and I saw some bearish order blocks or some bearish fair value gaps. And so I didn't like the long setup yet. Then I saw us come over here, and we did have a fair value gap in here, and I had it marked off on my chart, but what I hadn't seen is any change of character yet. That change of character did not come over until over here, and I want to see that change of character as part of my elements of a trade setup before I enter the trade. So, this came up to the order block, looked like it could have rejected. We could have seen further downside, was still tracking that symmetrical swing from this move here. And so wanted to see that change of character. So we end up getting the change of character. So then I adjust my fib level to this swing high and this swing low, right? The 236 basically and 238.33. So then we get that nice displacement candle. There's a bullish fair value gap, and I called out in the Discord rooms. I said, I want to see price come back down below equilibrium, or I'm not going to take the trade. Well, price ended up just kind of bouncing off the fair value gap, and then rallied up from there. Ultimately, headed higher. Did not quite hit the liquidity target I was looking for, which was it was a specific level at 241.61, but it rallied up nicely, right? And so sometimes you miss the trades, but it didn't have the setup I was looking for. Right, because of this kind of bouncing, it did not look overtly bullish. Then we get this just massive 1 minute candle, and then we don't end up coming back down to discount. So if I'm trying to be more strict with my trading and my rules, and if I miss out on the trade, I miss out on the trade. I had the 25% trade that went off in the first 30 minutes of trading. I told the guys in the Discord room and the gals for that matter, I said, hey, we hit one out of the park right out of the gate, first 30 minutes. You can walk away from the day and feel good about the trade. 100% win rate on the day, right? But we missed a much bigger move, and I'm not going to be sad about it. Just because there's money left on the table does not mean that we weren't successful on the day. And I want to teach everybody who follows and who listens and who wants to learn is that, when you have criteria, you don't bend on your boundaries and you don't budge. You only enter the trades when the criteria is met, and you have very specific guidelines and boundaries on how you execute the trade, and then you continue to do that, and you'll find good success, right? So if we would have come back down below equilibrium into discount, our stop loss would have been back at zero or back at this swing low, and we would have targeted optimal trade or a symmetrical swing, which would have been up here. And if we would have got that, you can see that we would have hit. Right, but price just didn't want to cooperate in this specific setup, and it didn't give us our discount, so I didn't enter the trade. But hopefully, maybe some of you guys did. Maybe some of you guys were willing to enter that, but it just didn't meet my specific criteria. So if any of you guys were wondering why we didn't jump on that, that's exactly why. So hopefully this has been helpful content for you guys. I'll continue to bring you guys smart money concepts, chart analysis for Tesla, and appreciate all the support. We're 15 members away from hitting 500 YouTube subscribers, and at that point I'll be giving away a free t-shirt to one lucky subscriber. So thanks for the support. Don't forget to smash a like, subscribe if you're still here, and share with all your friends. We'll see you guys on the next one.